Flour Mills of Nigeria says its profits nearly tripled for the financial year ending on the 31st of March. The company says its post-tax profits rose 184% to 11.4 billion naira, despite the prevailing economic headwinds and the difficult operating terrain at Apapa in Lagos. Flour Mills of Nigeria's Chief Financial Officer, Anders Kristiansson, now joins me to discuss the details of this. Anders, a pleasure to have you join us for this conversation on Parliament West Africa. I'd like to start us off by having you just talk us through what were the key drivers of this earnings.
Thank you very much, Chris, and a pleasure to be on the show. Thank you so much. What we saw happening in Q4 was a progression of what we have seen over the year. We closed the year with 72% before tax profit growth and 184 after tax growth, which resulted in a tripling of the earnings per share. This came from a couple of different components. We had traditionally had a tough Q4. We run an accounting year from April to March every year, and the December to the January to March period has been a little bit challenged as our wheat-based food products are selling slightly less than in the non-harvest season. And we have traditionally spent quite a bit of funds on sourcing our agri products. This year, we saw the agri segment doing much better. We had spent quite a bit of resources and effort in ensuring that the sourcing was working well, and we saw strong growth in both animal feeds as in edible oils. The sugar segment, which is a segment that we started growing in 2014, 2013, is doing very well, and we have invested into the road to market on the food segment. So we saw very strong growth in terms of pasta, noodles, and other refined wheat products. So we were very pleased with the year and Q4.
Now, Anders, a financial year ending March 2020 almost certainly predates the realities brought into the industry and the globe, the economy, by the COVID-19 pandemic. Do you get a sense that your results from April to June will begin to show us some exposure that you may have had to the COVID-19 pandemic?
I think the COVID pandemic is something that we are learning on a day-to-day basis. So far, we have seen that our business model has been very resilient to external shocks. We took quite a bit of measure as of the beginning of March when it became apparent that COVID was going to be more severe. So as of the beginning of March, we started to take measures to ensure that employees were safe. We went into alternate working. We ensured that those working in the factories could come to the factories in a safe way with busing. In some cases, we provided accommodation, temporary accommodation closer to the factories. We provided meals. We provided medical backup. So we started taking these measures as of the beginning of March. And we also, in March, did quite a bit of donations. We participated in the central bank's in the industrial initiative, where we did a $1 billion donation. In line with our vision of feeding Nigeria, we spent 300 million on donations to the states across the republic, primarily, of course, where we are present. And we did around $1.5 million of medical importation that we, together with NCBC, then deployed to the different areas of Nigeria. So we already in the Q4 numbers in the March results saw the impact of COVID. Since then, we have been able to run full production, and we are able to manage the supply chain in such a way that we can distribute the products across Nigeria. So it's of course a bit of a touch and go, but so far the model that we have has been very resilient to the external factors.